Good morning, everyone, and welcome to the European crossover. And we've seen the cable take an extra dip with that North Ireland court ruling. Obviously, this is what's impacting, but we've been talking about the last couple of days, and yesterday in particular was the dollar yen and the impact of the ZBs on the dollar yen. And it says the dollar advanced to a 3-month high against the yen on Friday, on track for monthly gains against the major currencies as investors waited for U.S. third quarter growth late in the day. So obviously, today we have fresh advance at GDP. Okay, it says a solid number would give the Fed an opportunity to upgrade the economic assessment in the November statement and boost prospects for a December rate hike. Could also keep to reassure stock markets, which would be supportive of the dollar against the safe haven yen. A disappointing result, however, could trigger a fall in the dollar, scenario that played out in late July when U.S. Second quarter GDP product data came in that week. A median forecast in the report is for the advance third quarter GDP to show growth of about 2.5%. Says we expect an annualized 2.9% quarter-on-quarter growth, said Anshi Prefke, currency strategist at Commerce Bank, adding that the positive trade data issued on Wednesday had raised the chances of a better than expected outcome. Dollar rose to up to 105.42 yen, its highest level since July. We were talking about that because we've been saying that for a long time, is that it's all about the ZB. So as the ZB broke lower, there was only one direction for the dollar yen to go to, and as I've talked about, is that you haven't heard any news out of the Bank of Japan, you haven't heard any news out of their economic data. This is all being generated on the run in the ZB. It says unit interest rates are implying more than a 75% chance of the Fed raising interest rates by December. Rising U.S. bond yields has helped. I would not say it has helped. It has been the sole cause to bolster the dollar in recent weeks. The greenback having risen 3.75%, 3.7% against the yen so far this month, its biggest monthly gain since May. And I wouldn't say the rise in bond yields, which has impacted other FX pairs, but I would say it's the sole reason for the dollar yen, and the only reason for the dollar yen. The euro edged to 109.16, but was down nearly 3% for the month. Focus in Europe will be on German and French inflation data. Will be scrutinized for clues to Eurozone inflation data due on Monday. Any slippage may raise questions on an already feeble Eurozone inflation outlook, said Viraj Patel, currency strategist at ING. Obviously, the bigger news is here with cable, and Yesterday we'll go to that in the charts, but we'll show the significance of that 2244. I was going over that with Blake 2 days prior and saying, hey, that's where the market will go to, and it'll have a little bit of trouble. We closed above that yesterday on a 2-hour bar, and then we summarily had a bearish engulfing bar, which not only did we close back below the 2244, but we had a bearish engulfing bar and opened the market for a lower test. And we'll get to that. Basically, this Northern Ireland court ruling that says essentially they can go ahead and move with this Article 50, which is the concern that the market believes that this is going to go on and, obviously could potentially speed things up, which obviously is going to weigh on the cable, and that's why they ultimately ended up taking them lower. Similar case has been hard, with campaigners arguing that the government does not have authority to trigger Article 50 without explicit support of the Parliament. But they say the UK case is quite different from the Northern Ireland case, said Mizuho's head of hedge fund FX sales, Neil Jones. But right here, right now, the market reaction would be to see that the headline is a free pathway to trigger Article 50, and the reflex reaction would be to sell the pound. That's why, obviously, we're moving lower. So we do have German CPI at 8 a.m. Eastern ahead of the U.S. GDP, advanced GDP, but obviously this is going to be the headline shaker for today is the U.S. advanced GDP for 3Q. That'll be out. We also have employment cost index. I don't think that's impacting anything. I mean, there isn't any uncertainty as far as them potentially raising rates. Obviously, a weaker number is would bring those percentages down, but everything looks like all motors ahead for a raise in December. So I don't think this employment cost index does too much at all. It's just going to be obviously advanced GDP that's going to move everything, and we'll have, like I said, the German CPI data coming out at 8 a.m. Eastern. We're going to move into the charts. Amit says, good morning. Morning, Amit. So I was talking to the guys in the chat room this morning. They were talking about the cable, and we went over this, and I thought it was pretty important to go over this today right from the get-go. Obviously, the Northern Ireland ruling is having a big impact, but we had talked about this on the way up as this market was, a couple of days back. As the market moving higher, we talked about this being an area where you're going to see some pushback, which was this 2244. You can see all the touches coming across here. And you can see the first run up here to 2244. They get knocked back. Not too bad, but they get knocked back, 25 pips or so. They make another run up to 2244. And they're hanging on, but they're just stalling. They can't get any headway. And after, this is 3 bars, so it's almost 6 hours, we can't get past it. The market pushes low and obviously takes out the prior reactionary low right here. So we move all the way down here, essentially right all the way down to almost 22 even. We get this rally up here, and we pop up about 2244, but we just can't close the deal. You see how weak we close here. And then as we get above it, it looks like it's, like I was telling the guys, it looks like it's blue skies ahead. But what happens is not only on a 2 hour close do you lose the 22.44, but you lose it in grand fashion. You lose it with a bearish engulfing bar here. I don't care about the wicks. I was telling the guys in the chat room, I could care less about the wicks. All I look at is the body. If you look here, you see that? It's just actually right there at the neck here. But that's good enough for me. So like I said, when you look at this, you can see here that this body is engulfed. And like I said, this one is basically opens and closes right there, so it's right at the tip. But like I said, I don't care about the wicks. And actually, if you look at this wick and that wick, it over engulfs it. But all I care about is the body. And so this body engulfs this prior body when we close above 22.44. And you know that this was an area where the market was having some trouble. You know, we actually pulled back by, like I said, by about 25 pips from here. They made one foray above it, and they closed weaker, and then they pushed them lower. We got above it, but we just couldn't close to seal the deal here. And the market pulled back. Pretty good, setback. But when we close above it, then what you want to see is this market be able to rally. When it closed above it, it looked pretty good. Like I said, I was telling the guys, blue skies ahead. But when you see this next bar, at this point, you just have to get out if you're long. You see what I'm saying? And if they eventually go higher, okay, they eventually go higher, and then maybe you can get long on the move above that. But this is not good at all. And I wasn't paying attention. I was telling the guys, I haven't been paying too much attention to the cable anyway, but I'm saying is when we were looking at it this morning and they're talking about it being weaker, and I was like, well, God, you know what? It got above the 22.44 and lost it. And I, with a little bit closer scrutiny, I was telling them, I was like, my goodness, like that's a bearish engulfing bar. I mean, because it engulfs the body. Like I said, it's right there at the tip, but like I said, the whole body here is engulfed. So more importantly, like I said, you lose the 22.44 because you got it. You finally break above it. And this opens the door for blue skies ahead. But then you immediately lose it on the next closing bar. That's a 2-hour close. And then on top of that, you do it in grand fashion with the bearish engulfing bar. So that really put the onus. And you can see here, once you do that, the market doesn't play around. It wasn't like it just kept on going lower here. It closes. We try to get up, try to push back here. But you can see when the market sees this, it's like, no. And then I think this has more to do with people finally just their stops being hit. Anybody that was long and saying, okay, well, that doesn't look good. I'll put my stop at 22.05. I'll put my stop at 21.90. I'll put my stop at 21.80. And we're just, I think at this point, this bar being so bearish just weighs on the market. And at that point, I think it's more about now the market tests the stops. Because even if you were, let's say you were thinking about getting on the cable here, you're thinking, well, this is pretty bad. I'm going to wait to get long after we take out this low. And you know what? I might just wait till we get further past this low. And you can say, I think this is more about the market just eventually start, hitting the stops. Because this is so bearish, it's just a matter of them pushing lower, hitting some stops, hitting some more stops, hitting some more stops. And then finally, it looks like we finally got to the bottom. And now, but the market isn't taking off. Because remember, like I said, you see these moves on a Thursday, and you're thinking, okay, it's going to roll into a Friday. This isn't good. So even though the selling is quelled, you just can't see any more further pickup. And then I didn't even know that they were having that Northern Ireland court ruling or whatever. Like I said, I haven't paid that much attention to the cable as of late. But obviously that was weighing on the market for any upside move. I mean, they'd stabilized, but look where they stabilized. Way much lower, over 100 pips lower. So the market wasn't selling off anymore, but we couldn't get any kind of an upside lift. And obviously that ruling essentially opening the door for them to, trigger Article 50 without parliamentary support, open the door for them to push lower. Now the wheels aren't falling off the caboose, but it's already come off, and I think you took anybody that was bullish here, you pretty much knocked them out immediately here with this close. It's pretty hard to be bullish once you got this close and the market kept pushing lower. So I would question how much further it can go here. Because I think you knocked a lot of people out of the box already. You see what I'm saying? So unless you believe, wow, now we're going to make a whole brand new leg down. Like I said, I just don't see that it's a Friday, but I don't see people saying, wow, now I really want to put on shorts now. I just think you clobbered out some longs at this point. So we're going to move into obviously the bigger news. I mean, what we talked about is the dollar yen here, and we talked about this because of the impact of the bond market and how that continued to move lower. And we've been talking about the bond market for weeks and weeks and weeks. And this move, like I've been saying, it's not like a broken record. I'm no fan of the dollar yen, but like I said, if you believe, which I have believed, that it's all predicated on the moves in the bond market, the ZB, then how could you say, well, I refuse to say it will go higher? Of course it could go higher because of what was happening in the bond market. And my point over the last week and a half or so was, this has nothing to do with the Bank of Japan, which has no credibility. When I say that, it's not like just to go and say it like some of y'all do. I'm saying it has no credibility to move this market. And you haven't heard them say anything to say like, wow, yeah, when Hamada said this, which is their key spokesperson, or Kuroda said this, or what's his name? I can't think of the other guy's name. It starts with an S. Suga. You haven't heard anything from Hamada or Kuroda or Suga to say, oh yeah, you see, right when he came down here, Kuroda was on the wires and he said this, or Hamada said this and that gave us that extra boost. And Kuroda said, they're not saying anything. That's to say they have no credibility. They were talking all the way down here and the market kept going the other direction. So the best thing for those yahoos to do is just frickin' shut up. This has nothing to do with the yen. You haven't heard, like I said, you can't tell, not one of y'all can say, oh yeah, the machine orders came out on Tuesday and it was this, and the economic law and that. You can't point out to it, you can't give me an economic report over the last 2 weeks it has had any impact. This has nothing to do with the Bank of Japan, has nothing to do with the yen, has everything and all to do with the ZBs. Now we've come into some pretty key support in the ZBs. That level I was talking about, 61.30. Right now the ZBs are at 62.10, and we actually came down earlier to set a newer low and then pop right back up. So here's the deal. We're at the end of the week, and it's always you never want to just take the other side of FX because it's just going to be a momentum type thing. Although I will say I'm a bit disappointed that we couldn't have gone higher here. So you have some key levels above. We also have this zone here, 573 to 650. And I think any forays into the middle of the zone, 614 is where you want to lay these longs off. We'll have to see price structure-wise how this stands when we get there. Because obviously, if we were to get to 573, that's the bottom of the zone, which confluences with 575, which is a 78% of the low of 99.53 here to 750, you'll probably see some good pushback. If we were to see like an 85 pip pullback and the market regroups down here, then yeah, we could end up pushing much higher. But all things being equal, if we just try and hold them here and we can't work a little bit higher, you'll probably see some pushback around this 575. But I think maybe the market can make one more push. It might be an economic report. I don't know what it is. It ain't gonna be no Japanese economic report. Give me a break. Nobody listens to those guys. They're nothing. They're nobodies. Okay, get that through your freaking head. Um, so if we get like some, obviously the big mover today is advanced GDP. I don't know if it's going to take us way up to here, but I'm saying is any moves, let's say it's next week and we get whatever report it might be, and then we get a foray above 106. Yeah, I would go on and exit those longs, and you probably get a chance to buy it. Now, like I said, if we dip immediately and we're down here in the 460s, and then, yeah, well then we'll have to do more work, and then we'll probably go well past that 614. But all things being equal, the market steadies itself. Maybe we pull back a little bit, we work higher. I think that any move above 106 is going to be a good area to go on and exit. And the reason is because you see all this volume here. I mean, you've got a good zone here between 573 to 650, but I think there's a lot of volume right in here. And so any moves above 106, in this area 614, I think you would want to lay off those longs. I guess while we're on it, we might as well take a look where we are on the ZBs, because that's what has impacted in a direct relationship what's happened here in the yen. So here's that level I was talking about, the 6130, and it could even be could have been just a hair bit lower, but I was just going for the overall. And that level's been in place for a little while. If you look here, it probably could have gone right there. You see here and here, which probably would have given us a little bit better area, which might have given us that 23 or whatever. But what I did was I just was going across the board with the most touches. You see here, and that's why I came with the 6130, which let him overshoot past 62, which thinking it's only going to overshoot by 2 ticks is probably not realistic. So he probably could have seen that. And you look right, you see here, right there, that area here, that was probably the better to go with, but I was trying to get an overview here. So right here to here, which would have come in, yeah, around the 25 area here, right there. There was that little prior high right there. You pull back to here, take us right about like right there, which would have been like probably 25. But like I said, if you look at the bonds, we're in a very good area of support. And now you could get one more dip. If we were to get a good GDP, that might push us lower in here. But we've come quite a ways. I'm not saying you try and buy them today, but I'm saying is when you look at it in the direct relationship with the dollar yen, it's coming into a Friday, so they could go and weigh on it, but we're really overdone. I think that if we were to make new lows, you might see a little bit more trouble on Monday, but not much. And then I think we'll try and steady the boat here. So I think that takes us to where we are with the dollar yen and how much higher we can go. Obviously, a good advanced GDP will probably push the bonds lower, but I mean, the wheels have completely fallen off the caboose. So how much further can the wheels fall off if they've already fallen off? You see what I'm saying? So I would question, obviously the sentiment's very bearish. We've been talking about that. And we talked about how these guys and gals have put up some very good fights here on the way down. The longs have put up good fights here. And to a certain extent, they were rewarded, but only on an intraday basis. You see what I'm saying? Very good fights all the way down. Look at that. They're putting in a fight here. They're putting a fight in here. They're getting rewarded. Putting in a fight. Intraday, they get rewarded. They break to new lows. They put up a good fight, and look at that. You see? Come down here, and this one looked like awesome. I mean, we broke the new lows, hammer bottom, and they do get rewarded. They pull back. See a nice pullback, and they're working higher. You see what I'm saying? But as we couldn't get past the 65.14 on a closing basis, on a 4-hour closing basis, then these guys and gals were like, forget about it. No way, dude. I am not even going to go on it. Matter of fact, it's better just to take the short side and I put my stops above 65.14, and then they would just start to lean on them. And then it was just at this point now, you don't have anybody that's willing to, other than maybe some short covering here, you don't have anyone willing to stand up and put up a fight from the long side. You see that? See, unlike here, and these weren't bottoms, but look, unlike here, they put up a fight. Here, they put up a fight. You see? Here, they put up a fight. Look at this. These guys and gals were throwing in the towel, and that's what I was talking about. So that's what I was talking about. Hey, this lid could come off on the dollar yen. But I am a little bit surprised the dollar yen wasn't able to add more juice to it. That is a little bit concerning with the dollar yen. But you wouldn't want to fight it on Friday. And we've seen the bond market here then put in a little bit of a double bottom here. You see this here on the 30-minute chart. Actually took up this low, and you can see the market pushing back. So like I said, it looks like it's just overdone. We'll see how the advanced GDP, but even if it comes in better, the thing is once you're already low, I mean, how much lower can you go? You see what I'm saying? You got to find somebody to take the other side. And at that point, people are saying, well, I don't want to be a seller now. You see what I'm saying? So you get some of that short covering. Well, it's almost time for a break. So when we get back, we'll go in and take a look at gold's been a tricky market, I think. I mean, we were bearish in the chat room the last couple of days, but there was an area that I thought there was a decent area for them to pop back up, which they did, but I don't have a good feel on what. I still believe gold will go sub 1250 overall. But on a very short-term basis, it's been putting up a pretty good fight. But obviously, if we get a good advanced GDP, this will probably weigh on gold. So it looks like it'll probably go sub 1250. And it is somewhat breaking down on a very short inter-term basis. So we can go and slip further, but I wouldn't say it's been a little bit of a tricky market. Some people were actually bullish gold a couple of days ago, and I thought it could push higher. But if you look at the price structure of the market on the 15-minute chart, it looked like it was going to have a tough time getting through that 1274 area. Even though once we got above that prior high, which I think it was 1275.80, we just couldn't push higher, and the market was struggling. So from a price structure standpoint, we were warning about that. I thought that if we could get up to like 1280, it was just going to be where they would just sell right into it, and we just couldn't fill the bill up there, and that's where we broke them lower. Now they popped them back, and they kind of broke them lower. They popped, and then yesterday they broke them lower, and then they popped them back as the ZBs started to calm down. But it's just kind of like one of those things where it's just kind of pulling back on its own weight. So I'm not going to say how far I think it could pull back. I still think we're going to go sub 1250. So we'll have to see. That's a bit of a tricky one. But let's go on and go take a break now. Okay, everybody, welcome back to the crossover. We'll get back into the charts. So lots of times on Fridays, we'll kind of focus a little bit more towards a tutorial. I think it's important, when you look at markets across the spectrum, and when I say the spectrum, I'm talking about like on the majors here. And I've been, hanging my hat on quite a bit over the last few weeks, which is on the dollar Swiss. And I'd mentioned about how it was trading almost at about like a, just pulling something out of the air, like almost like, at least to me from an eyeball look, traded like almost like a 96% correlation or relationship with the euro. But then over the last 2 weeks or so, you'd kind of lost that a little bit. And I'm not so much looking at the euro, but I'm talking about the move that we saw here in the dollar yen. And I think that faked out some people. We talked about the dollar Swiss's inability to take out this key area, this 99.58. And why, like I said, I always point at the levels. That's the way that I look at a market. Come back here, this 99.58. And you can see here the significance of this 99.58. And so that was my whole take, was like, wow, it's not getting past this 99.58. And I thought that even if it could get past the 99.58, I just didn't see where it had the juice to go to make. Here's the deal. If you take out a key area like this 99.58 that we pointed out, you can see the significance of it. It's freaking huge. You see what I'm saying? If you take that out, and we talked about that, that's going to push us. The target on this would suggest then a move, and whenever this would break, to 101.25. And the way the dollar had already moved, my thought was, we're having a tough time getting past 99.58. But if we could get above it, the next target would be 101.25. Do we have the juice? Does the market have the juice to go 175 pips higher? And that was my take. I just didn't believe it could, even if we could pop above it, which we did pop above it. But look how quickly it gave it back. You see, basically, not only give it back is essentially almost, because it didn't engulf this body, but almost a complete bearish engulfing candle. But the key thing is that we lost 99.58 on a 2-hour closing basis. Now I'm looking at a 4-hour chart. You can look at it on a 4 chart. The reason I would have pushed to a 4-hour, because I like to look at 2-hour, is because there was so much data. There's no way I could have encompassed it all on a 2-hour chart. Because even with the 4-hour chart, it's already pressed here pretty good. But you can see the significance of 99.58. But you see how we lost it. So when we lost this, and we did get above 99.58, like I said, we focused more on Fridays, more towards a tutorial type session. When we broke above it, we've already gone over this, but the reason I think it's important, because I'm going to compare it to another market. This, and we've gone over this before, but this will reinforce it. We should have broken at least down in here. Now, it wasn't like it had to go a whole lot lower, but don't forget, we got up to what, 99, like 99, 95 or whatever. So we essentially broke up like about 40 pips higher. So when we were coming to these lows here, we should have at least been able to get like around 99.30, maybe even 99.28. So the euro wasn't buying that move up there. And I already told you that the correlation had kind of fallen apart a little bit. It was not as strong. So at that point, that's what I was thinking, At the time, I was short dollar yen. I'm like, no, it's not. So I'll still say short the dollar yen, which it paid off. It was a good trade. But like I said, so the market came back here. Now, I think where a lot of people got fooled Because, as I told you, I don't look at the cash dollar index. I just don't, because the reason is the euro comprises 56% of the cash dollar index. So I don't need, at least that's my take, I don't need to look at the cash dollar index. It's basically the mirror opposite of what's going on with the euro. So I need to look at the cash dollar index for. At least that's my take. Now, if the only market I looked at was the euro, I'd say, okay, I guess I should look at the cash dollar index. But I'm looking at the dollar Swiss, the dollar CAD, the pound versus the dollar, the yen versus the dollar, the Aussie versus. I don't need to look at the cash dollar index. I'm just not going to do it. But here's where I think people got fooled. So, and I use this more closely. Okay, I almost use this kind of like as a proxy for the dollar index, somewhat. So I think when we broke lower here, people were saying, well, the yen can't go any higher because the dollar index isn't going any higher, so the yen's going to be contained. But as I've been saying I kept telling people, this is not about the yen versus the dollar. It's about the ZBs, the 30-year bond. So as long as the 30-year bond was still falling, this thing was going higher. Now, like I explained to Blake yesterday, when we were topping out here at 486, and I explained it very, very, very clearly yesterday, if you missed it. This is when I got short the dollar yen. But at this time, the bonds were rallying. The bonds had come off a full point, more than a point off their lows. So they were blowing and going to the upside. And the bonds trade as an inverse relationship to the dollar yen, somewhat. Like I said, so obviously higher bond prices, lower bond yields, which works against the dollar yen. So that's why I felt comfortable at that time. I wasn't feeling great, but I said, okay, I'll still hang on because the bonds are a full point off their lows. So I'll hang on. And so we did finally break down in the dollar yen. I didn't hang on for this whole move. I was like, well, I'm going the other direction, and I don't want to take any chances, blah, blah, blah. But it did end up, pull back here. But like I mentioned to Blake yesterday, the difference is now the bonds are falling apart and continue to fall apart. So the dollar yen, I was saying, hey, look, this thing's going to take off. But actually, I'm surprised it's not higher. I really am. So those that hung their hat on, and I'm using this as a proxy for the dollar index, and said, well, the dollar index is not at new highs, so the yen can't go higher. That's my whole beef the whole time. I keep telling y'all, this has nothing, absolutely nothing to do with the yen, has nothing to do with the Bank of Japan, has nothing to do with any of those mouthpieces from the Bank of Japan saying and doing anything, nor any economic data. It's all about the ZB. So that's what I'm saying. This is trading as a proxy. If you're like, I don't want to trade the bond market, that's a little bit too big, the moves are too big, okay, then trade the dollar yen. It's trading with the bond market. Now, the only thing I will say here, and I went back to that, but you get to a point where the markets are going to do what they want. So let's go back here to the bond, because like I said, this is more focused on a tutorial basis. So you might say, okay, well, we got to a key area here in the bonds. You mentioned that 61.30. I mean, you know what? That makes a lot of sense to me, I tell you what. And the bonds are higher, okay? They've actually, in the overnight session, they came to new lows. We even had a nice hammer. They came to new lows, took it out, and we're coming back. We're still moving higher. And we'll look at it on a closer basis. You see how we took out that, just for effect here, we'll plug this out. So we took out the low here, and you see how nicely we come back. And if we can get above here, that's going to look good. It's going to look very good. The prior low was, I believe it was 62.19, if I remember correctly. And And that was back here. I don't know what day it was in here, but I thought, well, maybe it was in here. I guess it was here this week. But then we had a rejection, and we'd come down here. Maybe it was on this move from the 63.19. But here's the deal. The support here, if we can get a 2-hour close above this area here, I'll mark this off. This is what we need. You see right there? We need to get a 2-hour close above the 62.17 area here, because that would have this reactionary low here. Actually, we didn't have, it wasn't a reactionary low because it still kept falling. But will it be above here? Will it be above this low? But here's the deal. So you're thinking, okay, well, we've got this double bottom. You're saying it's all about the ZB, so that must mean the dollar inch start pulling back. Well, the thing is, you don't fight the Friday flows. Okay, and here's the deal. So you have to, like I said, nothing's ever nothing. Oh, Nick G says, do you think that the US dollar FXCM index poly is a broader base index? It might be. Here's the deal, like I said, I just don't, to me, from my own analysis, I just don't see the point of looking at the dollar index when the euro comprises 56%. Now, if that was all I looked at, it probably wouldn't be that smart. But since I'm looking at the dollar Swiss, and I use that kind of like a gauge to see, I use the dollar Swiss to tell me as a confirming, non-confirming indicator. Okay, so I'll give you an example what I'm referring to, and that's what I'm saying. Like on Fridays, I like to focus more on a tutorial type session. So what I do is, let's say let's say the euro dollar is telling me, and I'm using this as an analogy. Okay, so I'm getting ready to go out and I see a lot of some dark clouds. And when I say dark clouds, let's say I'm thinking about it, I'm going outside, I look at the window and I see some dark clouds for the dollar, in the sense that, look at the euro, it's, working higher. So maybe there's some dark clouds on the horizon for the dollar. And I'm just saying on a very, very short-term basis. I'm like, you know what? Wow, it looks like we have a bottom here. So I look out the window and I'm like, the clouds look pretty dark. I mean, it looks a little bit dark. I mean, I don't know if it's going to rain or not. So I go to the dollar Swiss, and let's say the dollar Swiss is then breaking down also. You see, and it's not. It's breaking down. I go. So the dollar Swiss is when I open up the window or I step out the door and I can smell moisture in the air. And I go, oh, you know what? It is going to rain. Or chance of very high probability it's going to rain. So I'm looking at the euro, and I'm saying on a very short-term basis, this doesn't look too good for the dollar. The euro is still under a lot of pressure. I'm just saying on a very short-term basis, if we thought this was the bottom and the dollar was going to run into some trouble. So I go, God, kind of like double bottom here. We've made a lower here, and then we got a spinning top. Or some people might even refer this to as a morning, the morning doji. But I'm saying is, which means a bullish move. So I'm looking here, and this is spinning top, which means when you see this, it means that the momentum has slowed down, and so chances are it would probably turn the other way, which you can already see, made a new low. It's like, oh, this doesn't look good for the dollar. I see dark clouds on the horizon. Maybe it's going to rain. So I go to the cash dollar. To the dollar Swiss. I go, if the dollar Swiss is breaking lower, also, I'm going, oh, it's going to rain for sure now. No guarantees, but it sure seems like, let me bring my umbrella. But you see, it's not. You see what I'm saying? So I think what happened was, because the dollar Swiss wasn't getting back above here, which I've heard people mention the dollar index, and go, well, it didn't break above higher. But the key thing is I kept telling y'all, this was never about the yen versus the dollar. It was about the ZBs. Now, fast forward to where we are now, and you go, well, wait a minute. You just showed a double bottom on a 30-minute in the ZBs, and that probably means now this should probably be a selling opportunity. Notice it doesn't sell off. It's stalled for right now. But the thing is you don't fight the Friday flows. So no one is going to take the other side of the dollar yen on a Friday, because anybody that's been short and might remain short, they're in trouble. You see what I'm saying? We're higher. So I've been on that side of the page. And so those people are saying, well, maybe we'll get a weaker GDP. I mean, I don't know. The bonds are kind of like, they're looks like they put it at a double bottom. We might even go, if we get a bad GDP, we might even drop past 5 and get down to 46, and I'll look to cover there. That's what I'm saying. That's their thought process. So you probably have people that haven't given up, and so they're not letting these guys and gals out of jail. They're going to keep the bid going, and on a Friday, and it's the best close. You saw the Reuters report, the best close in 3 months, or the best price in 3 months. There's no reason. So we've already been talking about, well, where do you get out? Well, you see, if you look at this chart, 575 is 78%. But if you get it up in here, this is where you want to exit, and then let the market come back for 100 pips and get long. So nobody's talking about, oh, the market's going to go and come back for a correction. So the market has a very good bid tone here. The only difference is, like you said, like, wait a minute, the ZBs look like they found double bottom. Yeah, it does look like found double bottom, and they are overdone. So that means this is probably overdone. But you can't take the other side of the trade on a Friday. It's going to be a very nice weekly close, and I don't even look at weekly charts. But that's going to be a very nice weekly close, which points to much higher prices. So that's, like I said, we may not have got to the markets, but on Fridays, I always like to have kind of like a tutorial-based session. That way, something that you could take with you that you can use for down the road when you say, it may not even be the dollar yen. It could be the dollar versus the CAD, could be the dollar versus the Aussie or whatever. You go, you know what? I've seen this movie before. And it makes you think, like I said, because nothing trades 1-to-1, although basically this has almost traded basically 1-to-1 with the bond market. If you flip the bond market chart upside down, it's the same. Or if you look at just rates, it's the same. But, you might say, well, that means I need to go, bonds are coming off those lows, that means I need to short the dollar yen. Not on a Friday, you don't. And if we do get a good GDP, and I think the GDP would be favorable, then that'll probably push the dollar yen higher. If it pushes up here, from an intraday basis, not a bad area just to just exit out. But I tell you what, the higher we go, the better it looks on a weekly chart. And nobody's going to go and fight it. James said gold. Well, we already talked about gold. It's not because I don't want to cover it. I'm just saying I still think gold's going down sub 1250. And it tried to go on and break higher. We've gone over it the last couple of days. We actually finished yesterday's session. Matter of fact, Blake's getting ready to come on. It's going to be the same thing we were yesterday. We were looking at the gold yesterday, right when Blake came on. So I think we're going to go sub 1250. They did try and get above the 1278. They just couldn't do it. We got above the reactionary high of 1276, and we just couldn't find. Actually, the reactionary high was 1275.80. We just couldn't get any momentum. It's a little bit tricky. Obviously, if the GDP comes in good, that's going to weigh on gold. But yeah, I've been saying I think we'll still go sub 1250. It looked like we might be able to get above 1278 for some, additional stops to be hit, but they just couldn't fill the bill. So that's it. So Blake should be on any moment, and that's it. Yeah, Nick says that the 10-year rate is still holding above 185. I just don't even follow the 10-year rate. I had it on when I was on the bond page before. I don't want to follow the 10-year. I know it's the most widely traded, blah, 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 blah. I'm just going to follow 30-year bonds. 30-year bonds have been calling stuff good enough for me, and that's good enough for me. I'm not interested in following the 10-year. I know it's more actively traded. There's a lot of reasons. Way back in the days, 30-year bonds used to be the most widely traded. Then, because of the way they set home mortgages and blah, 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 that's where everybody shifted the focus towards the 10-year. Rightfully so, and you wouldn't see 30-year bonds really across the globe. Everybody's focused towards 20 years. That's why the 10 years ended up becoming such a popularly traded instrument. But I see the market more clearly when I look at the 30-year bond versus the 10-year. But Blake should be on.
I'm here. Hey, Paul.
Hey, Blake.